Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I want to speak about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment has just created a very strong impulse to the upside, followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market at the moment has just retraced exactly in the zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong area of monthly demand and support, which we could expect this market to potentially reject to the upside. We can also notice how if we extend this area to the left, this was the previous demand and support from which this move to the upside was created. As the market is testing exactly the same zone, this creates confluence of support at this area that we could in fact, as we just said, expect the market to reject to the upside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we can see how the market has been creating a series of higher highs and higher lows. Every single time the market went and retested exactly the previous high when it comes to these impulses and corrections. So from here, this move to the downside was created. The market broke it to the upside, went and retested previous resistance turn support, broke to the upside, went to retest previous resistance turn support. Now, that is exactly what you expect in an ideal uptrend. You expect the market to continue to create higher highs and higher lows, retesting every single time the previous resistance turn support. This is exactly what you expect in an ideal uptrend. So here, by looking at what is going on from a weekly perspective, it appears quite clear that more bullish price action could be expected away from this area. Now, also here on the weekly, what we can do is take our Fibonacci from the low to the high of this impulse. And what we can see is that the level that the market rejected is exactly the confluence of support given by the 0.786 Fibonacci retracement, which we can see here how the market tested very precisely, which was in confluence with the previous resistance turn support. The market tested its zone, rejected it to the upside, and from here we could expect more bullish price action away from this area. Going down on the daily time frame, what do we have? Now, from a daily perspective, we can notice how the structure has just shifted from the structure of a bearish market to now having the structure of a bullish market. In fact, here on the daily, we were going from creating lower lows and lower highs to now for the first time creating higher highs and higher lows. This move to the upside that the market just printed essentially broke above this previous high here, which is now previous resistance, which is turn support. Now, if the market will go and retest this previous resistance turn support, from here there is good probability to see a rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the order flow, so the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players, what we can see here by looking at gold is that net positions have been increased over and over and over again. We went from having 64k net positions all the way up to now having 160k net positions, with longs getting increased from 209k to 256k and shorts getting decreased from 151k to only 96k from an institutional perspective. This makes gold quite strong because clearly institutions are on the bullish side of the market. So if the market will now go and retest this level, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you want to learn more, you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, the all-inclusive mentorship program, which you can find at transparentfxtrading.com. Here, you will see that you have an entire video presentation that I made breaking down exactly everything that you can access to, so all the courses, softwares, services that you gain access to. In fact, in the all-inclusive mentorship program, you have the possibility to gain access to all the courses, one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data, which is the one that we used in this analysis, the COT data software, the trading station software, which puts together everything that you need as a trader all in one interface, the account funding program, in which essentially we cover the fees for you to apply for any prop firm that you want. However, you have to obviously have first graduated. And if you continue to scroll down the website, obviously you will see that you have the possibility to join directly from it and start the application. So I really suggest that at least you go and check it out at transparentfxtrading.com. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.